Hello, Charters. How are you all? We were into partnership and we had done reconstitution, and today we will start with dissolution. Now, Chartered, what does dissolution mean? Dissolution means winding up of partnership firm. That means they will shut down the business. Am I clear? Dissolution means winding up of business. That means they will shut down the business. Correct? Any problem? No, sir. Now, Chartered, when they shut down the business, in such a situation, we are supposed to sell all our assets, pay all our liabilities, whatever money is left, we will give it to partners. Am I clear? We'll sell all our assets, pay all our liabilities, whatever money is left, that will give it to partners. In this part, our objective is to learn how to close books of accounts. In this part, we prepare basically 3 accounts. 4th account if required. 3 accounts are: number 1, realization account; number 2, partners capital account; and number 3, cash bank account. Partners capital account, cash bank account, not a problem. But what is realization account? Realization account is nothing but a profit and loss account prepared at the time of dissolution. Realization account is nothing but profit and loss account which is prepared at the time of dissolution. Am I clear? Yes, sir. So, realization account, partners capital account and cash bank account. Now, charted steps to solve the chapter. First, we will close the balance sheet. Step 2 is treatment of assets and liabilities. Step 3 is realization expenses. Step 4, treatment of insolvency. Step 4 is close the realization account. Step 5, insolvency. Step 6, close capital account. Step 7, cash and bank should tally. Sir, once again, sir, tell. Number 1, step 1, close the balance sheet. Okay. Step 2, you will do treatment of assets and liabilities. That means either assets and liabilities is sold or it is taken over by a partner. Step 3 is realization expenses. Step 4 is close realization account. That means find out realization profit or loss. Step 5, insolvency. Step 6, close capital account. Step 6, close capital account. And step 7, cash and bank account should tally. So, first balance sheet, treatment of assets and liabilities, realization expenses, realization profit or loss, yes. Insolvency, yes. Close capital account by transferring it to cash bank, yes. And cash bank should tally. Correct, incorrect? Correct. Now, charted, how should we close our balance sheet? Balance sheet, there is asset side, there is liability side. When we close our liability side, we transfer all our liabilities to realization. We will transfer all our liabilities to realization, but liabilities does not include 3 things: capital, current and cash bank. Capital, current and reserves and surplus. Capital, current and reserves and surplus will not be transferred to realization. Am I clear? Yes, sir. Rest all other liabilities will be transferred to realization because you are closing the books. They will be transferred at which value? They will be transferred at book value. Remember, you are closing the balance sheet. So, whatever value is appearing in the balance sheet, that same value you will transfer it to realization. Remember, at whatever value it is appearing in the balance sheet, at that same value you will transfer it to realization. Correct, incorrect? Correct. When you transfer liabilities, liabilities will increase or decrease? Or decrease. If liabilities will decrease, debit or credit? So, liability decrease, you will debit. When liability decrease, you are happy or sad? So, liability decrease, happy. If liability decrease, you are happy, that means it's a profit or loss? Sir, profit. Profit should be debited or credited? Sir, credited. Credited to which account? Sir, realization account. So, we pass the entry liabilities to realization. I repeat, we will not transfer 3 liabilities. Which 3 liabilities? Capital, current and reserves and surplus. Capital, current and reserves and surplus, you will transfer it to capital account only. So, you will not prepare current account specially. No. You will transfer capital, current and reserves and surplus, everything to capital account. Acha. Rest all other liabilities, you will transfer it to Rest all other liabilities, you will transfer it to realization. When you transfer the liabilities, you are transferring the liabilities. When you transfer the liabilities, liabilities will go up, come down. When I transfer the liabilities, liabilities will come down. If liabilities will come down, it should be debited or credited? Credited. If liabilities comes down, you are happy or sad? Sir, happy. Happy means profit or loss? Sir, profit. Profit should be debited or credited? Credited. Credited to which account? Realization. Therefore, chartered, the journal entry is liabilities to realization. Am I clear? Yes, sir. No, sir. Transfer all liabilities individually to realization at book value. Except partner's capital, prepare separate account. Partner's current account, transfer it to partner's capital. Reserves and surplus, distribute amongst partners in capital account in PSR. Partner's loan account, that I'll come to it. JLP reserve should also be transferred to realization account. JLP reserve should also be transferred to realization account. Why? Because it is nothing but provision. It is nothing but provision only. Provision on JLP. Achha sir, JLP reserve also will transfer it to realization account because JLP reserve is nothing but provision. Now chartered, transfer of assets. All assets must be individually transferred to book value at realization except cash and bank. All assets must be transferred individually to realization account except cash and bank and PL debit. PL debit balance means loss. Okay, sir. When you are transferring assets, assets will go up, come down. Sir, come down. Assets come down, you will debit or credit? Sir, credit. Asset comes down, you are happy or sad? Sir, sad. Sad means profit or loss? Sir, loss. Loss should be debited or credited? Sir, debited. Loss is debited to which account? Sir, realization. If an asset will be credited, loss will be debited to realization and the entry will become realization to assets. Am I clear? Yes or no? Yes, sir. Shall we move ahead? Yes, sir. Now chartered. Farhan Khan, hi. Now chartered. Cash and banks, prepare a separate account. PL debit, it's a loss, should be distributed among the partners in PL. Now chartered. You will also transfer goodwill and JLP should also be transferred to realization. Goodwill and JLP should also be transferred to realization. Okay, yes. Now when you are transferring debtors, this you would have studied in your 12th standard also. Debtors is suppose 50,000. Provision for doubtful debts 5,000. You will transfer full debtors as asset and full provision as liability. So chartered debtors, gross figure will be transferred as asset and PDD will be transferred as liability. Yes sir, no sir, yes sir. So sir, transfer of assets will transfer all assets including JLP and goodwill individually at book value. Always remember, you can transfer assets and liabilities at book value only. Book value means the value at which it is appearing in the balance sheet. Correct? Yes. Except cash bank and PL debit balance. Cash bank a separate account. PL debit is a loss that you will transfer it to partner's capital. When you transfer assets to realization, journal entry is realization to assets. Am I clear? Yes sir, no sir? Yes sir. Now chartered, treatment of assets and liabilities. Treatment of assets and liabilities. Either assets are sold or it is taken over by a partner. If assets are sold, cash bank account debit to asset. No. If assets are sold, the journal entry is cash bank to. If assets are sold, journal entry is cash bank to. Cash bank to realization. Why cash bank to realization? Because assets are already transferred to realization. Now assets are represented by realization account. Achha. When assets are sold, it is cash bank account debit to realization. Correct. Am I clear? Yes sir, no sir? Yes sir. If asset is taken over by a partner, the journal entry is partner's capital to realization. Why not asset? Because all assets are now represented by realization. When you transfer liability charter, the journal entry is realization to cash bank if the liability is paid off, to partner's capital account if it is taken over by a partner. Don't write liability to bank. Because all assets and liabilities are transferred to realization, hence all assets and liabilities will be represented by realization account. Yes or no? Yes, sir. Now, chartered, look at this journal entry. Suppose goods purchased but not recorded, rupees 4,000, and it is included in the closing stock. You have purchased goods, but it is not recorded. When you purchase goods, the journal entry is what? When you purchase goods, chartered, the journal entry is what? Sir, purchase goods ka journal entry is purchases to creditors. This is rectification of errors because you had not recorded. Yes. This is rectification of errors after final account is prepared. Yes. In case of rectification of errors after final account is prepared, instead of chartered nominal account item, that is instead of income and expense, you will use what account? You will use PL adjustment. So entry will become PL adjustment to creditors. 4,000, 4,000. Correct? Now, since you have credited creditors, your creditors will increase. Yes. So when you are transferring creditors in the balance sheet, transfer of liabilities mein, that time you will increase that creditors by 4,000. Suppose balance sheet mein already 30,000 ka creditors is appearing. That you will transfer it to realization. Like this, no, by creditors. 30,000, because balance sheet mein creditors was how much? 30. So you will transfer 30 plus this 4. So instead of writing 30, you are supposed to write 34. Correcta, incorrecta? Correcta. Now charted, that means this should be add to creditors in realization account. Add to creditors in realization account. Yes, sir. No, sir. Yes, sir. This PL adjustment you have debited. PL adjustment. Instead of what you have written PL adjustment? Sir, instead of purchase. Why? Because purchase is an expense. You have recorded PL adjustment. Now, chartered, if you debit purchase, purchase will increase. Yes. Expenses will increase. Yes. If expenses will increase, profit will come down. Yes. That is why we have debited PL adjustment. It represents loss or profit coming down. This P&L adjustment account should be closed by transferring it to capital account. This we had learned in rectification also. PL adjustment account should be closed by transferring it to capital account, and hence second entry will become partners capital account debit to PL adjustment 4,000 and that should be in profit sharing ratio, and this would be chartered in profit sharing ratio. Now, we have done transfer of assets, realization to assets, transfer of liabilities to realization, assets sold or taken over, cash bank, partners capital to realization, liabilities paid off or taken over. The entry is realization to cash bank to partners capital. Correct? Realization expenses. Chartered realization expenses, this is not there. Realization expenses, if it is paid by the firm, then realization to cash bank. If it is paid by the partners, then realization to partners capital. If it is paid by the firm, realization to cash bank. If it is paid by the partner, realization to partners capital. Am I clear? Yes, sir. No, sir. Sir, why realization to partners capital? Because the firm is supposed to pay this amount to partners. Firm was supposed to pay realization expense, but partner has paid. If a firm has to pay partner that amount now, correcta, incorrecta? Hey, you all are understanding or not? If you're understanding, thumbs up. Now, this. Now, realization, profit or loss. Whether it's profit or loss, you transfer it to partner's capital. Insolvency we'll do little later. Close capital account by transferring it to cash bank. Close cash bank and cash bank should tally. Now some important points. Question remaining silent. All liability. QRS matlab question remaining silent. Question remaining silent means if nothing is mentioned in the question, all liabilities should be paid off at book value. All liabilities should be paid off at book value and all assets should be realized at book value. All liabilities should be paid at book value and all assets should be realized at book value. Now, asset except goodwill and other intangible assets. Goodwill you cannot realize, intangible assets you cannot realize. JLP should always be surrendered at surrender value. You have to close JLP at surrender value. Payment of partner's loan or partner's spouse's loan. Partner spouse मतलब husband के लिए wife is spouse, wife के लिए husband spouse. For example, now chartered cash bank realization. Now, ready? Yes. A's loan 4,000. A is a partner. Nothing is mentioned. Then directly you will pay off in partner's cash bank A's loan. If nothing is mentioned, you pay it off at book value. 4,000 is a loan, you have paid off at 4. Am I clear? Loan is 4,000, is nothing is mentioned, you pay it off at 4. Is that clear? Yes or no? Yes, sir. Sir, what if partner was appointed for realization and allotted some money for realization expenses and went beyond expenses allowed to him? Then extra expenses he only has to bear, for which no entry. Now, Samiksha. Now, A's loan is how much? 4,000. You are paying off how much? 2,500. A's loan is how much? 4,000. But you are paying off how much? 2,500. So, cash bank mein you will write A's loan 2,500. A's loan 2,500. But 4,000 ka loan, you are paying only 2,500 chartered, so 1,500 ka gain. Loan is how much? 4,000, but you are paying how much? 2,500. Therefore, 1,500 ka gain chartered. Yes or no? Yes. That gain should be transferred to realization. A's loan. Oh, understood? Yes. A's loan is paid off 5,000. Loan was how much? 4. You paid off 5. So, cash bank mein write down A's loan. Loan is how much? 4. But you paid off how much? 5. So, you paid off extra 1,000. Yes. So, liability 4. You paid off 5. Extra 1,000 is a loss. Loss should be debited. How much is the loss? 1,000. Correct, incorrect? Correct. Shall we move ahead? Yes. If loan is taken over by A, if A's loan is taken over by A, charted, then the journal entry will be A's loan to A's capital. If A's loan or A's spouse's loan is taken over by A, then A's loan to A's capital. Loan, partner's loan or partner's spouse's loan is not transferred to realization. It is directly paid off. Partner's loan or partner's spouse's loan is not transferred to realization. It is directly paid off. Am I clear? Yes, no. Now chartered. Shall we move ahead? Harsh, hi. Yeah, Yashwant, yes sir, understood. Now chartered. If liability is paid off using any asset, then no entry, no impact. This is very important point. If any liability is paid off using any asset, then no entry, no impact, no treatment. Why? Let's see. Creditors of rupees 1000 is paid off in full settlement by giving him furniture worth rupees 800. Correct? Yes. Then what will be the journal entry logically? 1000 ka creditors ko you are giving him furniture of 800 in full and final settlement. That means 200 is discount received. Yes. Then the journal entry logically should become creditors account debit. How much? 1000 to furniture 800 to discount received 200. Creditors 1000 to furniture 800 to discount received. Correct? Now, instead of creditors, which account will write? Instead of creditors, we'll write realization because all liabilities are now represented by realization. Yes sir, no sir. Yes sir. Then furniture. Furniture is an asset. This asset should also be represented by which account? Realization account. Yes or no? Why? Because all assets are transferred to realization. So realization to realization. Instead of liability, we'll write realization. Instead of asset, we'll write realization. 200 discount received. That 200 gain. Gain is transferred where? Sir, profit and loss account. Discount received is transferred where? Profit and loss account. Realization is nothing but profit and loss account prepared at the time of dissolution. So discount received will also be transferred to realization. Oh my God. The entry has become realization to realization to realization. Yo. So ultimately, no entry. No entry. Am I clear? Yes sir, no sir. Yes sir. Shall we move ahead? Yes sir. Next charted. Creditors 10,000, furniture 12,000. Creditors 10,000, furniture 12,000. Furniture of rupees 6,000 was given to settle creditors of rupees 8,000. Acha. Furniture of rupees 6,000 was given to settle creditors of rupees 8,000. The normal journal entry is what? Creditors 8,000 to furniture we have given 6. So to discount received 2. Sir, can I say profit? Yes, you can say profit also. Ultimately, that profit will also go where? PL account. Instead of creditors, what will you write? Realization. Instead of asset, what will you write? Furniture. Realization. Why? Because all assets and all liabilities we had already transferred it to realization. Therefore, now all assets and all liabilities will be represented by realization. This will be also go to realization. Therefore, no entry, no entry. Now, thereafter, balance of creditors. Creditors for total how much? 10. You have settled how much? 8. The balance of creditors left is how much? 2. That 2000 ka creditors are paid off at a discount of 10%. So logically, what journal entry you would have part? Creditors to discount received 200 to cash bank 1800. So instead of creditors, what we will use? Sir, instead of creditors, you will use realization. Exactly. Instead of discount received, what will you use? The realization. Cash bank, you have to use only because cash bank ke liye we prepare a separate account. So ultimately, chartered, what will be the journal entry? Ultimately, journal entry will become realization to cash bank 1800. If any liability is paid off, we had decided earlier only, if any liability is paid off chartered, the journal entry is realization to cash bank. When any liability is paid off, journal entry is realization to cash bank. Correct, incorrect? Correct. But you don't have to worry about discount receipt because it gets automatically adjusted. Yeah, no? Yeah. Therefore, chartered, you need not think about profit, loss, discount received, discount allowed, anything because it gets automatically adjusted. Correct? Yes, sir. See over here, you did not worry about. Number C. Balance of furniture. Furniture was how much? 12. Out of that 12, how much you have used it? 6. So how much furniture is still left? 6. 12,000 ka total furniture. By 6,000 ka furniture, so you have given it to creditors. Now charted how much ka furniture is still left? Sir, 6. That 6,000 ka furniture is sold for how much? Yeah, 5,000. 6,000 ka furniture, you are selling off at 5,000 for 1,000 ka loss. Normally journal entry is, normal journal entry is what? Cash bank account debit 5,000. PL account debit 1,000 to furniture 6,000. Correct? Yes. Instead of cash bank, we'll use cash bank, but instead of PL, we'll use what? Realization. Instead of furniture, realization. So credit 1, sorry, debit 1, credit 6, ultimately credit 5. So net impact ka real entry will become what? Cash bank account debit 5,000 to furniture. No, sorry, cash bank account debit to realization. Now chartered, don't you think? Now chartered, don't you think that 1,000 is? Don't you think 1,000 gets automatically adjusted? So please, please, please do not think or account for discount received, discount allowed, profit or loss since it gets adjusted automatically. Yes or no? Yes, sir. I understood. Yes, sir. Now chartered. Now, chale. Let's solve one question. This question. Amit, Sumit and Kumar. Amit, Sumit and Kumar. Are partners sharing profit and losses in the ratio 2:2:1? The partners decide to dissolve the partnership on 31st of March 22 when the balance sheet was as under. Capital account. Amit, Sumit, general reserve, Kumar's loan. Oh, Kumar is a partner. Kumar is a partner. Loan from D. D is not a partner. Loan from D. D is not a partner. Creditors, bills payable, outstanding salary. Land and building, plant and machinery, furniture, investments, book debts, less provision for doubtful debts, stock, bank and capital overdrawn. This is capital account ka negative balance. No problem. The following information is given to you. Realization expenses amounted to how much? 18,000. Out of which 3,000 is borne by Amit. That means 15,000 is paid by the firm. So journal entry will become what? Journal entry is realization 18,000 to cash and to A Amit. 18,000 expenses, firm has paid 15,000, 18,000 expenses, firm has paid 15,000 and Amit has paid 3,000. Yes sir, no sir? Yes sir. Are you understanding? Now, a creditor agreed to take a furniture of book value 12,000 at 10,800. Acha. And the rest of the creditors were paid off at a discount of 6.25%. Now chartered, there is a creditor whom you have paid furniture. Tell me fatafat, when you pay off creditors through furniture, what will be the journal entry? Fatafat. Everybody tell me, when you pay off furniture, when you pay off creditors using furniture, what shall be the journal entry? Bolo, bolo, kuch to bolo, samne. No entry. Why? Because if any asset is used to pay off any liability, no entry. We have done this here. If any liability is paid off using any asset, then no entry, no impact, no treatment. Correcta, incorrecta? Correcta. So you will not pass any entry. But total creditors is how much? 30. Out of that 30,000, how much you have paid off? 12. Out of that 30,000, how much you have paid off chartered? 12. You are still supposed to pay how much? 18. When you went to pay off 18 chartered, there is a discount. Sorry. A agreed to take over furniture of book value 12 at 10,800. Out of 30, you have paid 10,800. Remaining is still 19,200. That when you are paying, the journal entry is how, what? Let's see. Now chartered. Adjustment number 2. Take creditors how much? Creditors 30,000. This creditors 30,000 ko we gave a furniture how much? 10,800. 12,000 ka furniture we gave them at 10,800. Will we worry about profit or loss of 1,200? So 12,000 ka furniture you gave it away at 10,800. So there is a loss of 1,200. Will you worry about that loss? Nah, Bapa, nah. Why? That loss gets automatically accounted. You will not worry about discount allowed, discount received, profit or loss. Everything gets automatically adjusted. So chartered, you are still supposed to pay. You are still supposed to pay how much? You are still supposed to pay how much chartered? 19,200. We are going to pay 19,200 chartered. In that there will be a discount. Discount of how much? 19,200. Discount 6.25%. 1,200. Ultimately, you are paying how much? 18,000. So, chartered, tell me. Will you pass entry for furniture? No. Will you pass entry for discount received? No. You will only pass entry for cash back. What will be the journal entry for this 18,000? Journal entry for this will be realization to cash bank. Journal entry will be realization to cash bank. Correct, incorrect. Chartered, understood, then thumbs up. Not understood, then thumbs down. Fatafat. If you have understood, then thumbs up. Not understood, then thumbs down. Bola bola. Tell me. No, only realization to cash bank. Chalo. Other assets realized as follows. Furniture remaining. Acha, furniture was total how much? 25,500. Remaining furniture. Why remaining? Because creditor agreed to take over furniture of book value 12,000 at 10,800. That means out of 25,500 ka furniture, 12,000 ka furniture, you gave it away at how much? 10,800. Now, so 12,000 ka furniture you gave it away. Correct? Now tell me, remaining furniture means how much? 13,500. Yes sir, no sir. 25,500 ka total furniture is there. Out of that 12,000 ka furniture you gave it off to creditors. 12,000 ka furniture you gave it off at 10,800. There you suffered a loss of 1,200. I will not pass entry for furniture given to liability. Neither I will pass the entry for loss. Why? Because everything gets automatically adjusted. Yes or no? Yes sir. But out of 25,500, if you have given away 12,000, the still left with how much? 13,500. That is taken over by Kumar at 90%. So 90% of 13,500 chartered. So 90% of 13,500 is how much? Tell no, please. No. 90% of 13,500 is equal to 12,150. Correct? Yes. Now chartered. Stock realized 120% of book value. Stock is how much? 36. So 36 plus 20%. Adjustment 3. Assets. Assets realized. Assets realized how much? Stock. Stock how much? 36,000 plus 20% is equal to 43,200. Thereafter, book debts, 12,000 of the book debts proved bad and the remaining were fully realized. Total book debts matlab debtors. Debtors were how much? 60. Out of that 60, how much is bad debt? 12. Rest realized. So debtors realized how much? Debtors realized 60,000 minus 12,000 is equal to 48,000. Yes sir, no sir. Yes sir. Land and building realized 1,65,000. Land and building realized 1,65,000. Therefore, chartered, how much money did you total realize? 2,56,200. Total money you realized is equal to, correct, JKSC, 2,56,200. What will be the journal entry for that? This you have realized from the assets. Journal entry will be, bola. Cash bank to realization. Journal entry will be cash bank to realization. Yes or no? Yes. So adjustment number 1 done, 2 done, 3 done, 4. Investments were taken over by Amit at a discount of 15%. Now chartered investment in balance sheet is how much? 15,000. That is taken over by Amit. 15,000 minus 15% discount. That comes to 12,750. Barabar. Furniture is taken over by Kumar and investments are taken over by Amit at 12,750. Correcta, incorrecta? Now, half of his loan, for half of his loan, he accepted plant and machinery and 7,500 cash, and the remaining amount was paid at a discount of 1,20,000. Now chartered, total D's loan is how much? 1,20,000. Total D's loan ko will divide it into two parts. One half, another half. One half ke liye he took two things. One is plant and machinery and cash 7,500. And for another half, he took entire cash at a discount of 10%. I repeat, total 1,20,000 divided into two parts. 60, 60. For first 60, he took two things. Number one, plant and machinery, and number two, cash 7,500. For second part of loan, entire loan is settled at a discount of 10%. Yes, sir. No, sir. Yes, sir. Now, therefore, chartered, adjustment number 4. Adjustment number 4 is loan. $1,20,000. D's loan 1,20,000 divided into two parts. 60 and 60. This 60 has again two parts. One, you gave them plant and machinery and we gave them cash also. Plant and machinery के लिए तो no entry. Cash 7,500. For this you have to pass the entry. What will be the entry? The realization to cash bank. Exactly. This 60,000 ko we paid off. Discount 10%. 6,000. So we paid off how much? Now chartered, this 54,000 and this 7,500, everything you have paid by cash? Yes. So ultimately, how much cash we have paid? Tell me. Now 60,000 ko cash 7,500 and remaining 60,000 ko 10% discount mein you paid off. See, it is given. For half of his loan, D accepted plant and machine 7,500 cash, and the remaining amount was paid at a discount of 10%. Remaining amount is again 60 only. So total cash paid is how much? 54 plus 7,500. Total cash paid to loan is 54 plus 7,500 is 61,500. Entry will be realization to cash bank. Realization to cash bank. Correct. Done. Everybody? Yes, sir. Now chartered. Now chartered. Realization account, cash bank account. One. Too many. Now. Realization, partners capital में अमित, सुमित, and Kumar. Correct? Yes. Now, first thing what we are supposed to do after drawing the formats. I am sure that everybody is ready with the formats. Now, first chartered you will close the balance sheet, capital account. Amit and Sumit will go in balance sheet liability. Correct? So, capital account. By balance, how much? 55,200. Then chartered general reserve. General reserve will distribute in which ratio? 2:2:1. General reserve we are supposed to distribute in the ratio 2:2:1 by general reserve. By general reserve 2:2:1. How much is the general reserve? 61,500 in the ratio 2:2:1. 5 से डिवाइड करके तो 12,300, 12,300 का डबल, 24,600 and 12,300. Correct? Now, thereafter chartered balance sheet में what you can see is, after reserves and surplus, what do you have? Kumar's loan. Kumar's loan chartered, you will shut your brain and pay it off. So cash account में will write by K's loan. If nothing is mentioned, we pay it off at which value? 15,000. If nothing is mentioned, we'll pay it off at 15,000. Loan from trade creditors, bills payable, outstanding salary. All will transfer it to realization. Journal entries, liability to realization. Realization में by liability. By D's loan 1,20,000 by creditors 30,000 by bills payable 12,000 by outstanding salary 7,500 by outstanding salary 7,500. So you have transferred all the liabilities. Now go to asset side. Asset side mein first asset is what? Land and building. I hope you are seeing the question. Asset side mein the first asset is what? Land and building. 1,35,000. Correct? Yes, sir. 2. Then plant and machinery 45,000. Then furniture 25,500, investment 15, book debt 60. Correct? Furniture 25,500. Thereafter, 2 investments. How much? 15,000. 2 book debts. Book debts matlab debtors, 60,000. But chartered debtors also have a provision for doubtful debts. The provision for doubtful debts would come on the credit side by PDD. 6,000. Then stock. Stock is how much chartered? 36. To stock. 36. Bank balance is how much? 13,500. To balance brought down 13,500. Instead of cash, write bank. Instead of cash, write bank. Correct? Yes sir, no sir? Yes sir. Thereafter, capital withdrawn 32,400. Kumar ka. To balance brought down. Kumar. $32,400. 1 second. Correct? Now chartered. So we are done with the balance sheet. Correct? Yes, sir. Now chartered, after balance sheet, what we will do? Sir, after balance sheet, go to adjustments. Correct. What is the first adjustment? Realization expenses 18 to cash, 15 to Amit 3. So realization may will write to cash bank, expenses 15 and to A, expenses 3. Realization में 2 cash bank, realization में 2 cash bank, realization में 2 cash bank, cash bank में by realization, by realization expense. How much? 15,000. This 3,000 expenditure chartered will be transferred where? The 3,000 expenditure will be transferred to tell. A is capital account. तो रियलाइजेशन में 2A में बाय रियलाइजेशन, रियलाइजेशन में 2A में बाय रियलाइजेशन. How much? $3,000 for expenses. Yes sir, no sir? Yes sir. Then adjustment number 2. Adjustment number 2, realization to cash bank. Realization में by cash bank. Realization में to cash bank. Creditors 18,000. Cash में by realization creditors 18,000. We have passed the journal entry. Here it is. Realization to cash bank 18 we were supposed to pay. Now the entry has become cash bank to realization, cash bank mein to realization, realization mein by cash bank. Correct, incorrect? Correct. Thereafter 1 done, 2 done, 3. Furniture is taken over by Kumar at 90%. If asset is taken over by a partner, then it is partners to realization. Partners capital to realization. So 2 partners capital to realization. तो realization में by Kumar furniture Kumar is taking over furniture at 12,750. Kumar is taken over furniture at 12,750. And Kumar में लिखेंगे to realization furniture 12,750. Yes sir, no sir. Yes sir. Now adjustment 1 done, 2 done. Assets realized, stock, bad debts and land. How much it realized? 256, 200. Cash bank to realization. Realization में by cash bank. Assets realized. Thereafter, realization में by cash bank में to realization. Assets realized. Correct? Yes sir. So chartered ये हो गया. Then adjustment 4. नहीं, investment were taken over by A. So Amit took over investment. The journal entry will be Amit to realization. Amit to realization. Realization में by Amit. By Amit. For what joy? Investments taken over. How much? 12,150. Investment taken over 12,750. Hey, 750 or 150? Check. Sir, furniture is 150, investment is 750. Now, furniture 12,150. Investment to realization. Investment Amit 12,750. Yes sir, no sir. Correct? This is 12,150. This is 12,750. D's loan. Ultimately, you paid cash 61,500. So realization to cash bank. D's loan 61,500. So cash bank में by D's loan 61,500. You are paying off D's loan. Bills payable on an average basis are 1 month after 31st of March 2022, but they were paid immediately. That means chartered our balance sheet is on 31st of March 22. On an average, you were supposed to pay after 1 month. But we are dissolving business on 31st of March. Then all bills we are supposed to pay today only. That means we are making 1 month early payment. If you are making early payment chartered, it is known as rebate and discount. Yes or no? It is known as bills retired. Yes sir, no sir. Adjustment number 5. Adjustment number 5. Journal entry will be bills payable की जगह realization to bank. Realization to bank how much? Bill is of how much? 12,000. We are making 1 month early payment. So 12,000 minus 12,000 into 1 by 12 into rate of interest is how much? 6%. Correct. This is the amount of discount. Early payment ka rebate. Bolo how much? That comes to how much? 11,940. Realization to bank. Realization में 2 cash bank. Realization to expenses. How much? 11,940. Cash bank में. What is that? Bills payable. Sorry. Bills payable. Now 11,940. Now chartered. That is also done. Now fatafat. D's loan you have paid, creditors you have paid, bills payable you have paid, outstanding salary you have not paid. So 2 cash bank. Outstanding salary 7,500. $7,500. Then charted outstanding salary we paid off to cash bank. Nee. That's it. Correct? Bills payable के बाद outstanding salary. Now tell me fatafat. Calculate profit and tell. Calculate profit and 12. All liability is paid off. D's loan is paid off. Creditors is paid off. Bills payable is paid off. Outstanding salary is paid off. PDD is not a liability. It will never be paid off. It is a reduction in asset. Am I clear? Land and building realized. Plant and machinery okay. Furniture, investment, debtors, stock. All assets also realized. Fatafat charter. Tell me the profit. Jana again. Profit. Profit 42,400. Profit 42,400. No. Check karo. 120, 30, 12, 7.5, 6, 12, 150, 25, 500, 15, 60, 36, 15, 3, 18, 61, 100. Tell me. Na 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 na. Profit is 23,160. Profit is 21,160 chartered. This profit will be transferred to this profit will be transferred to partner's capital account by Gangubai. Realization profit in which ratio? The ratio is 2 to 1. 2 to 1 में 23,160. 23,160 by profit 9264 4632. आजा शाम होने आई 23,160 है ना, चेक करो. 9264 plus 9264 plus 4632 23,160. Now charted. After this, you have transferred all. Now you'll close partner's capital account. You have done transfer of assets, transfer of liability. Assets are sold, liabilities are paid off, realization expenses. Then realization profit. Then charted, there is supposed to be insolvency. But insolvency is not there in the question. If insolvency is not there, you just close your capital account by transferring it to cash bank. Fatafat to cash bank. Well, no, please tell no, don't be like this. 79,314, 89,064. By bank 27,618. 27,618. This will be transferred to cash bank by A में 2 cash में by A 79,314 by Sumit 89,064 to K 27,618. बराबर? Yes. 297,318. 297,318. And it has tallied. Correct? Yes, sir. Now chartered, we take 5 minutes break and then we start insolvency. Correct? And you will get time to finish this question also if you have not completed. Now chartered. Insolvency. Now understand carefully. Insolvency. Now chartered, this is your capital account. Suppose in credit side I have written 10 rupees, debit side 7 rupees. So my balance comes on debit side, but credit side is heavier, so this is known as credit balance. This is known as credit balance. But suppose debit side was heavier, then it is balance is on the credit side, that is 7 rupees. That means partner has given 10 rupees but has taken away 17 rupees. Therefore, partner has to bring 7 rupees. Am I clear? That means a partner having debit capital balance has to bring money. Yes. If he is not in a position to bring his share of debit capital balance, then we say that such partner is an insolvent partner. So, partner having debit capital balance or negative capital balance and is not in position to bring his entire negative capital, then that partner chartered is treated as insolvent partner. Is this clear? Yes. Insolvent partners capital deficiency. This 7 rupees which he is supposed to bring, if he is not able to bring, we call it insolvent. And this is known as capital deficiency. This is known as capital deficiency. 17 rupees, 10 rupees. That means he was supposed to bring 7. He is not in a position to bring. This is known as capital deficiency, debit capital or negative capital. This capital deficiency should be borne by solvent partner. Which partner? Solvent partners. Now chartered, in what ratio will the solvent partners bear this capital deficiency? Now, the law or the case law Garner versus Murray states that. Let's go through this case law. Now chartered, long ago. Sir, how long ago? 200 years ago. 1818 में there were 3 partners in London, Garner, Murray and Wilkins. Wilkins got oh my God. Oh my God. Sorry, I was on mute for my Zoom students. Suppose a partner has a credit, this is your capital account. Credit mein there is 10 rupees. Debit mein there is 7 rupees. Then this 3 rupees is known as credit balance because credit is heavier than debit. This 3 rupees partner has got excess money which he will withdraw from the firm. Life is beautiful till here. If he has got credit balance, that much money partner has to take it from the firm. No problem. But chartered, suppose this was 17. That means partner has contributed 10 but withdrawn 17. That means partner has to pay 7 rupees. That means partner has to pay 7 rupees chartered. This 7 rupees is known as capital deficiency, debit capital balance or negative capital. If a partner is unable to bring his capital deficiency or if a partner is unable to bring his debit capital balance or negative capital balance, then such partner is known as insolvent partner. Insolvent partners' capital deficiency should be borne by solvent partners as per the case law Garner versus Murray. So let's look at the case Garner versus Murray chartered. There were 3 partners. In 1818 in London there were 3 partners, Garner, Murray and Wilkins. They were into shoe business. Which business? Shoes. And their business suffered a loss of £36. Suffered a loss of £36 means chartered that assets were not sufficient to pay off liabilities and there was a deficiency of 36 pounds, which Garner, Murray and Wilkins were supposed to bring. But Wilkins was insolvent. But chartered Wilkins was insolvent. Oh my God. That means Wilkins' capital deficiency should be borne by Garner and Murray. In what ratio? Now, for that we had to refer Partnership Act. Now, what does Partnership Act say? I'll tell you. Then I will say what the judge said. Partnership Act says that up to insolvent partners' capital deficiency, up to solvent partners' capital should be borne in capital ratio, excess should be borne in PSR. For example, Garner, Murray, Wilkins. Garner, Murray, Wilkins. Suppose 5, 8, 3 and 20. Therefore, Wilkins' capital deficiency is how much? 17. Then 17 rupees is to be borne by whom? Garner and Murray. In which ratio? Their capital is how much? 5 plus 8, 13. So, up to 13 they are supposed to share in capital ratio. And beyond 13, that is extra 4 rupees, that they are supposed to share in profit sharing ratio. This is what Partnership Act says from section 49 to 51. I repeat, insolvent partners' capital deficiency should be borne by solvent partners up to their own capital in capital ratio. Beyond that, in profit sharing ratio. Correct? Incorrect? Correct. Logically bhi hai. 13 rupees, so they will only contribute to set off this. In which ratio? 5:3. Any excess loss will be borne in profit sharing ratio. Achha. But chartered, when Wilkins became insolvent, there was a fight between them. Oh my God. Garner is saying, we will share profit. We will share this Wilkins capital deficiency in profit sharing ratio. Murray says, nah, this is capital loss and hence should be borne in capital ratio. But they are fighting. But outside my charters, creditors are shouting. What they are shouting? Arey, you want to fight, but give us our money. Understood? Why? Because our assets were not sufficient to pay off liabilities. That means they sold all the assets. They got the money. They started paying off liabilities, but they could not pay off liability and the money was finished. So there were some creditors who were standing and shouting by, give us money. But Garner and Murray were fighting, stating that Wilkins' capital deficiency, Garner was saying that we will share in profit sharing ratio, whereas Murray was saying, nah, in profit sharing ratio, capital ratio. So they reached Supreme Court of England. Supreme Court of England, when they went, chartered Judge Joycey was there with 2 benches. So Judge Joycey told that we'll take decision after some time, but before that, Garner and Murray, go home, bring your share of realization loss to pay off creditors. Their share of realization loss. Who will bring? Garner and Murray should bring their share of realization loss in cash to pay off creditors. So Judge Joyce's first decision was that solvent partners should bring in their share of realization loss in cash. Am I clear? Judge Joyce's first decision was solvent partners should bring in their share of realization loss in cash to pay off creditors. Now tell me, chartered, judge will create law or judge will interpret law? Sir, judge will interpret law, he will not create law. And what does law state? That insolvent partners' capital deficiency will be borne by solvent partners up to their capital in capital ratio, in excess in profit sharing ratio. After seeing the entire thing, Judge Joycey told that Garner and Murray should bear Wilkins' deficiency in only capital ratio. How come, sir? Because Wilkins' capital deficiency, say suppose this was 10 rupees That means Wilkins ka capital deficiency was how much? 7. Up to 13, so they are supposed to bear in capital ratio. That means 7 rupees they will bear in which ratio? Capital ratio. So in reality, case law mein, Wilkins ka capital was less than total capital of Garner and Murray. That is why Garner and Murray is supposed to bear Wilkins capital deficiency in capital ratio. So judge gave us 2 decisions. Decision 1, that solvent partners should bring in their share of realization loss in cash to pay off creditors. Second, solvent partners should bear insolvent partners capital deficiency in capital ratio. Am I clear? So immediately a doubt arises, sir, capital ratio means which capital ratio? Exactly. So judge told capital ratio means capital as on date of dissolution. If partners are following fixed capital method, then whatever ratio you can see in balance sheet, then balance sheet capital ratio. Whatever capital you see in balance sheet, if it is fixed capital, how do you come to know it is fixed capital? If current account is there in the balance sheet, that means partners are following fixed capital method. If partners are following fixed capital method, then whatever is their capital in the balance sheet, in that ratio only they will bear the deficiency of insolvent partner. But if partners follow fluctuating capital method, then capital as on the date of dissolution means capital plus share of reserves and surplus plus rectification of error. Am I clear? Capital plus share of reserves and surplus plus or minus rectification of errors. This capital ratio will not get impacted by any asset or liability taken over by a partner during dissolution. This capital ratio will not get impacted by any realization profit or loss. Why? Because see charted, this is the date of dissolution. Then they started selling all the assets, paying off all the liability, and dissolution was complete. During this period, asset and liability was taken over by a partner. Then on this date there was realization, profit or loss. But all this happened after the date of dissolution. Judge has clearly stated that capital as on the date of dissolution, that means as on the first day, not on when the dissolution got complete, because this process will take minimum 2 months. So when you decided to dissolve, that day whatever was the capital, that capital you are supposed to take, not the closing capital. Hence capital ratio will be capital plus share of reserves and surplus plus or minus rectification of errors. Capital ratio will not get impacted by any asset or liability taken over by a partner during the process of dissolution. Capital ratio will not get impacted by any realization, profit or loss. Excuse me. Am I clear? Yes, sir. Now chartered. It is given. Step 1. Solvent partners should bring in their share of realization loss in cash bank to solvent partner. Insolvent partners' capital deficiency should be borne by solvent partners in capital ratio as on the date of dissolution. Solvent partners to insolvent partner. Capital ratio means ratio of capital as on the date of dissolution. In case of fixed capital method, balance of current account is there in the question. How do we come to know they are fixed capital? If balance of current account is there in the balance sheet, that means they are following fixed capital method. Capital ratio means ratio of capital as given in the balance sheet. In case of fluctuating capital method, that means balance of current account is not given in the question. Capital ratio is calculated as under solvent partner 1, solvent partner 2, capital, share of profit, share of loss, rectification of error. This capital ratio. Oh, solvent partner having debit capital balance will not bear capital deficiency. if any solvent partner has opening capital negative, oh my God, then he will not bear capital deficiency. Sir, why? Because he will bring his share of deficiency, or he will bear others' deficiency. Oh, secondly, mathematically this will become negative. One positive number, one negative number cannot have ratio. So therefore, two reasons. Reason number one, if I have got my deficiency, I will bring my deficiency, not your deficiency. Correct? So if a solvent partner has negative capital balance, he will bring his deficiency. Secondly, when you are calculating ratio, one will have a positive balance, one will have a negative balance. No problem. Bottom line charted, you remember now that solvent partner having debit capital balance will not bear capital deficiency. Okay. Understood. So what did judge tell? What is the crux of the story? The crux of the story is that judge gave us two steps. Step one, solvent partner should bring in their share of realization loss in cash. Second, solvent partner should bear insolvent partner's capital deficiency in capital ratio as on the date of dissolution. If they are following fixed capital method, then whatever capital is appearing in the balance sheet, in that ratio only. If they are following fluctuating capital method, then capital plus share of reserves and surplus plus or minus rectification of errors. Capital ratio will not get impacted by any asset or liability taken over by a partner during dissolution or any profit or loss on realization. Any partner having debit capital balance will not bear capital deficiency. Minor partner will also not bear capital deficiency. Why? Because minor partner is entitled to only benefits of partnership. Am I clear? Yes sir, no sir, yes sir. Now, I hope Hamid, Nihan, Preeti ji, Dikshit, everybody understood what I am saying. Yes or no? I understood. Capital ratio under fluctuating capital method. Opening capital, whatever is there in the balance sheet, plus share of reserves and surplus, plus or minus PL adjustment we had done, if you remember, rectification of errors. Where? Here, see, PL adjustment. This is rectification only, no? So if and because of rectification is their capital account getting affected. PL debit reserves and surplus means positive. PL debit means past losses. Correct? Now, anybody, any problem? Nobody, no problem. Hi sir, yes sir. Hey, understood everybody? Yes. Like, share, subscribe. So much effort, but nobody is doing that. Why? You are not understanding chartered. Hey, chartered. Chalo. Like, share, subscribe. Now, let's do one question now on Garner versus Murray. Correct? Ready? Steady? Go. Hey YouTube people, are you all understanding? Hema Govindraj, Karthik, Acha Akanksha Mishra. Hello sir, bye bye sir. Now, like, share, subscribe. Are like to dabao if you are understanding. If you are not understanding, then say X and Y are partners in a firm, sharing profit and losses in the ratio 4:3:2. 2 has come down. Okay. 4:3:2. Following is the balance sheet of the firm as on 31st of March 2022. Balance sheet. Partners capital account. XYZ. General reserve, creditors, fixed assets, stock in trade, debtors, cash in hand. Partners of the firm decided to dissolve the firm on the above said date. Fixed assets realized 5,20,000, book debts 4,40,000, stock was valued at 250 and it was taken over by partner Y. Achha. Creditors allowed 5% discount. Expenses on realization 6,000. You are required to prepare realization account. Oh, sorry. This question. Sorry. A and B are partners. इसको तो insolvency था ही नहीं. Correct. This one. This is insolvency. Now, X, Y, Z who are partnership sharing profit and losses in the ratio of 2:1. At the following balance sheet at 31st of December 2011. Capital X, Y, Z. Z's loan from Mrs. X. Oh ho ho. Z is a partner's loan. This is partner's spouse, wife's loan. Sundri trade creditors, fixed assets, stock, book debts, less provision, cash, advance to Y. This is drawings. The firm was dissolved on the above mentioned date due to continuous losses after drawing up the balance sheet given above. It was discovered that goods amounting to rupees 4,000 have been purchased in November, has been received, but the purchase was not recorded in the books. Fixed assets realized. So this is rectification. Goods were purchased, included in the closing stock, but not recorded in the books. So chartered, you have to pass rectified entry. Then fixed assets realized 2 lakh, stock 21, book debts 20,500. Similarly, creditors allowed 2% discount. Expenses on realization 1080. X agreed to take over Mrs. X's loan. Y is insolvent. Y is insolvent and his estate is unable to contribute anything. Give accounts to close the books. Work according to Garner versus Murray. Now, who is insolvent? Y is insolvent. Now, charted point number 1. They forgot to pass the entry. Purchase to creditors 4,000. Then charted PL adjustment to creditors 4,000. Then charted this 4,000. This 4,000 which you have credited should be added to creditors. So creditors in the balance sheet is how much? 25 plus 4, 29 you will transfer it to realization because 4,000 creditors were not recorded. And this PL adjustment ka loss or this PL adjustment account should be transferred to partners. So entry will be X, Y, Z to PL adjustment. 4,000 in which ratio? 2:2:1. That is 1,600, 1,600 and 800. Correct? Yes. Now, shall we move ahead? Yes, sir. Na, 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 na. Now charted. Realization account, cash, and partners capital. Partners capital is XYZ. Nina, 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 Nina. Correct? Now, chale chartered, yes or no? Yes, sir. Now, chalo, first let us start closing the balance sheet. Capital 29,200, 10,800 and 10,000. 29 by balance brought down 29,200, 10,800, 10,000. Acha charter, tell me they are following fixed capital or fluctuating? So that I don't know. Are Gyani Pandit, balance sheet mein current account is there or not there? Not there. If current account is not there, that means they are following fixed capital method. Yes or no? Yes, sir. Capital 29,200, 10,800 and 10,000. Correct. Z's loan. Z's loan. What we will do? Sir, pay it off. Nothing is mentioned. Exactly. Z's loan, you will pay it off. Fixed कहाँ सर है? Current account is not there, Aditya. Therefore, fluctuating. Z's loan, nothing is mentioned. Therefore, pay it off. How much? 5,000. Correct. Cash may be paid it off. Thereafter, next item is Mrs. X loan. It is given in the question that X agreed to take over Mrs. X loan. So, partners capital account में by Mrs. X's loan. In whose column? X का column. Don't write in Y or Z's column. Y will not take off Mrs. X loan. Risky in life. Then chartered. Creditors, that you will transfer it to realization. 25 plus 4, 29. So, by creditors 29. You told other way around. Oh, there is no current account, so therefore it is fluctuating. Correct? No. I told that only, no. There is no current account in the balance sheet, therefore fluctuating. I did not say that. I told something else. Oh, ऐसा क्या? Now, thereafter, fixed assets 40, stock 25. Fixed asset. How much? 40,000. To stock 25. Na 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 ni na ni. Debtors 25, provision 5. Debtors. Na 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 na. By PDD, opposite side में PDD, provision for doubtful debts. That is done. Case, where will case go? Case to balance brought down. Then advance, that will be capital account में. To advance, how much? 4,000. Shall we move ahead? Yes, sir. Now, the balance sheet is over. Then there was this drama. So creditors may we have added 4,000 PL at XYZ to PL adjustment. Rectification. XYZ to PL adjustment. Rectification. How much? 1600 800. Correct? Na 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 na. Now charted. Thereafter, it is given fixed assets realized 20, stock 21, and book debts 20,500. So, fixed assets realized. Asset realized means cash to realization. Realization में by cash. Cash में to realization. Correct? Fixed assets 20,000. Fixed assets 20,000. Then stock realized 21,000. Stock realized 21,000. Then chartered. Then charted after stock it is debtors 20,500. Debtors 20,500 chartered. Then similarly, creditors allowed a discount of 2%. That means creditors we paid at a discount of 2%. Creditors are how much in 29? So 29,000 minus 2% is 28,580. 420. So creditors we are paying. The journal entry is realization to cash. To cash. Creditors minus 2%. That comes to 28,420. By Gangubai by creditors. Sorry, by realization. How much? 28,420. Thereafter, realization expense 1080. Realization to cash expenses 1080. 1080. This is creditors and then the expenses. Now, correct? Ha sir. Yes sir. Now, so we are done with X agreed to take over loan. So we have done transfer of assets, transfer of liability, assets sold, liabilities paid off. Any liability or liabilities paid off. Realization expenses. Now we will close realization account to find out profit or loss. Fatafat, tell me chartered how much is profit or loss? Now, बोलो बोलो, profit or loss? बोलो बोलो, कुछ तो बोलो. Loss. By loss. 24,000. This loss of 24,000 chartered will be distributed between X, Y and Z in the ratio X, Y, Z. 2:1. 9600, 9600, 4800. 9600, 9600, 4800. Now, this loss will transfer to partner's capital. To realization. To realization. Correct? How much? 9600, 9600, 4800. Okay, done. After realization profit or loss charted, we are supposed to start insolvency ka drama. Correct? Let's start. Treatment of insolvency. Treatment of insolvency of Y. Partner Y. Correct? The first thing, always insolvency mein, shut your brain, you will do this working note. Ekdam set working note. First we'll calculate Y's deficiency. Y's deficiency. Now charted credit mein Y has 10,800. Credit 10,800. Debit mein 4,000. Debit 1,600 and debit 9,600. Yes sir, no sir? Yes sir. Therefore chartered deficiency is how much? Debit 4400. This is his capital deficiency. Credit, debit, debit, debit. Am I clear? Yes. This capital deficiency is to be borne in capital ratio. So first we need to calculate capital ratio. So now calculation of capital ratio. Capital ratio between whom? X and Z. How to calculate capital ratio? Opening capital, reserves and surplus, rectification of errors. Opening capital is how much? 29,200 10,800. 29,200 and 10,800. Rectification of errors, that is PL adjustment. 1,600. 1,600. With this, you are decreasing capital because rectification of error is on the debit side. Debit side means your capital account is going down. There is no reserves and surplus. Capital, reserves and surplus, rectification. Reserves and surplus is not there. Okay, so capital and rectification of errors. Now charted, this comes to how much? 27,600, 9,200. Tell me, na 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 na. Sir, Z is 800. Z is 10,000 and 800. 9,020. Now tell me. Now tell me, charter 27,600 and 9,000. 27,600 and 9,200 का रेशियो क्या है? तो 9,200 and 27,600 का रेशियो is 9 3 जा 27, 2 3 जा 6, so 3:1. Wonderful. Correct. Now chartered. Share of deficiency. Share of deficiency. What is the total deficiency amount? This 4,400. This 4,400 chartered X and Z in the ratio 3:1. X will bear 3,300 and 1,100. Now chartered. Journal. What is the journal entry for sharing the deficiency? Solvent partners capital account to insolvent partners. Solvent partners capital account to insolvent partners. Here, this is the journal entry. Solvent partners capital account to insolvent partners. Correct. So solvent partners are X and Z. X account debit, Z account debit to Y. बरोबर. X account debit, Z account debit to Y. Now charted, Garner versus Murray में two steps are there. What are those two steps? First step, solvent partners should bring in their share of realization loss in cash. That means X and Z should bring in their share of realization loss. X का share of realization loss is 9,600 and Z का 4,800. This share of realization loss they are supposed to bring. So what is the journal entry? Buy cash. Step 1. Buy cash. Step 1. Correct? Now, how much? 9,600, 4,800. So X might, cash might come 2X. To X to Z. Understood? Yes. Step 2 was solvent partners should bear deficiency of insolvent partners in capital ratio, for which we have parsed this entry. Solvent partners should bear capital deficiency of insolvent partners in capital ratio. XZ to Y. XZ to Y. Step 2. X is debited 3,300. Y. Z is debited 2X and Z. Step 2. Correct? 4,400. So we have done treatment of insolvency. Both the steps done. Now close capital account by transferring it to cash bank. Close capital account by transferring it to cash bank, and cash bank should tally. Now tell me charted. Balancing figure cash. Which capital account and how much? Balancing figure cash. Which capital account and how much? Bolo. 14,700. No. 29,200 plus 10,000 plus 9,600 minus 1,600 minus 9,600 and minus 3,300. That will come to how much? 34,300. Check Aditya. And 8,100. Correct? Now, this 34,300 and 8,100 will transfer it to cash. By X 34,300 by A by Gango by 8,100. Correct. Now chartered, tell me at what amount it is tallying. No. 76,900. 76,900 पे it is tallying. Correct? So charted, this is your Garner versus Murray. Understood? Draw a straight line, make 4 parts, calculate these 4 things always. 1, 2, 3, 4, done. Deficiency, capital ratio, share of deficiency, journal. Deficiency, capital ratio, share of deficiency and journal. Correct? Yes. Now charted. All partners insolvent. All partners are insolvent. If one partner is insolvent, 2 partners will bear the capital deficiency. If 2 partners are insolvent, 3rd partner will bear the capital deficiency. If all partners are insolvent, then outsider will bear capital deficiency. So what are you saying? Yeah. Now, when all partners are insolvent, no, you have to remember few things. Creditors will bear the deficiency. That means creditors will not get their full amount. Why? Because existing partners are not in a position to bring money. And when you see numbers now, you'll understand better. So first understand now, when all partners are insolvent, creditors will bear the deficiency. Achha. Therefore, creditors will not be transferred to realization account. Okay, so creditors will not be transferred to realization. You have to prepare 2 extra accounts. Excuse me. You are supposed to prepare 2 extra accounts. One is creditor account, one is capital deficiency. One is creditor's account, one is deficiency account. So what does deficiency mean? That's a nice question. When you always assume, no, somebody will not give you money. Your debtors will not give you money. That time you call that money as bad debt. But sometimes think reverse also charted. That you are also somebody's debtors. For creditor, you are debtor only, no? You also might not pay somebody. When you don't get money, you call it bad debt. When you don't give money, you call it deficiency. Am I clear? Yes. So, you will not transfer creditors to realization. You will prepare 2 extra accounts, that is creditors account and deficiency. Am I clear? Yes. Realization account will close by capital. Capital ka balancing figure deficiency. Realization will go to capital. Capital say deficiency. Okay. Whatever cash you have, you will give it to creditors. Creditors will go to deficiency. Cash will go to creditors. Creditors ka balance deficiency. So sir, one side mein realization to capital, capital to deficiency. Correct. One side mein cash, cash to creditors, creditors to deficiency. And then deficiency will tally. Oh my God, it's written everything. Oh, realization, capital deficiency, cash bank creditors, deficiency. Deficiency will tally. Chalo. So let's do it of chartered. Now, realization account. Then cash account. Then creditors account. Then cash. Then deficiency, a capital account, and then deficiency. Now chartered first will prepare realization account, cash account, then creditors account, capital account, deficiency account. Barabar? Yes, sir. Okay, I mean today only, today, tomorrow. Yes, bills of exchange mein there was deficiency. Notes are good, no? Notes are must. Now chartered. Notes. Let's start. The first, let's close the balance sheet. First is creditors. Will we transfer creditors to realization? Nah. Creditors to creditors account mein. My balance brought down 4,800. Then Amal's capital. So that will go in capital account. 750. Sir, inter may also like this notes are there. Yes, all 3 levels. In foundation also I give book only. Inter may also book, full book, workbook, where notes, capsules, questions, everything is there. Now, plant and machinery. So realization में 2 plant and machinery, 2500, 2 furniture, 500, 2 debtors, 1000, 2 stock, 800, cash में balance brought down 200, Bimal's drawing 550, Bimal's drawing 550, balance brought down. Yeah, drawings, that is negative capital only, brought down only. So if we write drawings, no, they will not deduct marks, but that is negative capital only. We are done with the balance sheet. Correct? Now charted assets realized as under. Plant and machinery 1250. So buy cash. Plant and machinery. Then furniture 150. Debtors 400. Stock 500. See, it's given over here. Plant and machinery 1250. Furniture 150. Debtors 400. Stock 500. Correct? Yes, sir. Total. Total is how much? 2300. So this will go in cash to realization. 2300. Barabar? Yes. Expenses of realization 175. Expenses of realization to cash. Expenses 175. Cash में by realization expense 175. Correct? Yes, sir. Thereafter. Amal's private estate is not sufficient to pay anything, but Bimal is able to bring 200. Amal to nothing. Bimal is able to bring 200. 2 cash. 200. तो cash में 2 Bimal. 200. Now charted. So we have done everything. Now realization say profit or loss. Profit or loss? Tell me. Na 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 na. Loss 2675. Loss charted, and this loss will be transferred to capital account to realization loss 1337 1338. Ratio is 1:1. Correct? So realization to capital say deficiency. First I'll do, then I'll explain. Capital say deficiency. deficiency. 5871688. 587 and 1688. Now, deficiency में 2A, 2B, 2A, 2B. Now chartered, capital done. So realization से capital, capital से deficiency over. That now cash, say whatever cash you have, that you will give it to creditors. By creditors, whatever cash you have, you will give it to creditors. 2525. Creditors में you will write 2525. So cash to creditors, creditors to deficiency. Cash to creditors, creditors to deficiency. How much? 4,800 minus 2525. 2275. That means creditors were supposed to get 4,800, but they got only 2525. Rest is creditors के लिए bad debt. For us, it is deficiency. Correct? 2275. Correct? Now it is tallied. Now chartered, how do we read this account? This was the amount which credit capital was supposed to bring but could not bring. This was the amount which capital was supposed to bring but could not bring. This is the amount which creditors were supposed to get but did not get. That means the amount capital did not bring is the amount creditors did not get. Oh, yeah, no? Yes. The amount capital did not bring is the amount creditors did not get, and that is why that amount. Am I cleared? With that, we come to end of dissolution. Next class, we'll do piecemeal distribution. Till then, bye-bye. Take care. Thank you. Thank you so much. Thank you, people attending YouTube. I hope you all understood.